Alright, so let me turn this off. I believe I have unlimited time to record on Camtasia, but I'm gonna check. I'm just really just figured this out. But I want to keep this stuff in the Discord starting now because I want to document it a little bit more. So I just wanted to take a minute to talk about how I traded today, why I traded the way that I did today, and just a couple things like that. But in a way, this is just going to be it's going to be like a little document for me to look back at my trades and my thought processes and everything, and I'll have it all compiled in the Discord, and I might put it in a separate file somewhere. I don't know, but I always find it helpful whenever I actually hear something and walk through it. So just thought I might start this for my own understanding, and if somebody else ever chooses to pursue this as well, maybe my brothers or somebody actually in the Discord group. But I can't be sure, so I just have to see where this goes. And the audio might even be bugging, so it might not even work. But first, I'm going to remove all the drawings because I know what they all mean and I can put them back on there, so it's not a big deal. But ahead of the open, I always start by looking at the news. So today is Tuesday, and there is no 8:30 news, no 10 a.m. news, and no 2 p.m. news, which is typically whenever those high-impact news drivers are. So I'm not worried about that. And then things that we see today. So in terms of indicators, the only thing that I use is the ICT kill zones and the new week opening gap / new day opening gap. I always use the new week opening gap, and usually it's on 1, but it's on 2 for right now because this gap right here is just so massive. I can't help but feel like I need it there because I knew price was going to be coming down into it because it's too large of an inefficiency for us to leave unfilled. Now, this volume imbalance that formed right here is a little it's a little concerning. So I imagine we'll trade up overnight and probably end up with a wick somewhere up here. But that's besides the point. I can't get too off on a tangent, but basically all of this move here was here this morning because we just ripped lower overnight. So we took this low out right here. Leave it up to sell side. Yeah, we took out this low right here, which is important, and then essentially this is just all one big suspension block right here. Like this is a suspension block right here, and then this is a suspension block right here. So just two massive, blocks that are supposed to be resisting price. But price needs to fill them. But for us to go down here would be almost impossible, especially with this order block right here, which is the opening price of this little down set of candles. So if I had to guess, this is as low as we're going to go. So tomorrow I'll be a little bit low risk depending on what we do overnight. But if we leave like a strong draw here, I'll keep that in mind. But this is really for a recap of my own trade that I took today. Of course, with paper trading though, so can't get too excited about that. This is also a suspension block, so if you notice these two volume imbalances on either side of this candlestick, this is the wrong color though. I have a block for this as well, the breaker one. Typically just is used for a breaker, but I'll use it for a suspension block right now. But price needs to fill all of these inefficiencies, so we'll spend a lot of time in here, and then whatever range we choose to break to is oftentimes where we see a massive displacement out of. So the fact that we displaced below almost all of the suspension block definitely shows a willingness to go lower, but if we go lower than this, I'll be surprised, and this low will remain completely untouched. We won't see this low hit, at least until next year. And I can't have a guarantee on that, but the fall seasons, it's a seasonal tendency to make a low in the fall and then trade higher. So I'm not leaning super bearish. I wasn't leaning super bearish today. As a matter of fact, I was actually leaning bullish, and I wasn't really looking at that suspension block. But as for today, if you drop into the 5-minute, you can see a little bit easier. Okay. But we just dumped overnight. Like, horrible. It was awful. The 15-minute would be better to see this. But it was horrible. We dumped we took right before the close, we took this New York PM high, which was formed right after the lunch. So a strong grab on liquidity right here, and then if you went to a higher time frame, this would be one massive fair value gap. So, and then this is an order block right here. So we tap into this, and really this is more of like a propulsion block. Same with this one right here, because we just slam lower, and then we take out this low. So this is a breaker. We see price taps back into this breaker at the height of Asia, and this is also this is just after a macro time, so this low was formed at just some random time. But this is the gap of last week, like this Monday it opened up. So noticing that it takes that gap and then fills it in on a retracement shows amazing signs of inversion, because we get this displacement into this gap. We retrace higher, which also is a fair value gap aligned with the upper part of this, which the bodies respect, the new week opening gap, retracement, slam lower. Okay, so super bearish. We take this low right here, this Friday's PM session low, so that is last week's, an important low of last week, which is just shy of, to be honest, what looks like the last piece of high resistance liquidity of last week. So noting that, which I did not notice this at the time of market open, that's why I do these recaps. Well, I'm starting to, but we just rip through this. And of course, this is all low resistance liquidity right here on the left, which I'm still working with Camtasia, so I don't know if that will even show up my cursor here, but we just have nothing stopping us. No, like, in theory, it would be like no support or resistance right here, because we've seen no high resistance. Like, this is high resistance because it's a swing point. This has all just been part of a trend, and, you know, what can you do with that? So we're just tearing lower. And I'm going to be honest, if you look, the only piece of high resistance liquidity is here and then somewhat here. But in theory, all right, if you take this entire range and then put the fib on it, so this is really not too, you know, boisterous. So to be honest, that's a weird ass word, but if you grade this entire range, I would normally use my gradients, but we're pretty much, this is about as low as I would expect us to go. However, you know, if you go to the daily, you have that bias, which is, you know, we're dealing with filling out. We're dealing with filling out this inefficiency. We want this finished right here. So if you align these two with our Fibonacci and this top of this order block, you can actually see some alignments on as far as we expect price to go. Now I'm getting a little off topic here, but you see this quadrant, the 75% level of this range, and then this order block are very close together. So if we go below this tonight, tomorrow is going to be troublesome, in my opinion. And if we drop below the 79%, which I would have to put that level on to see, we would also be in big trouble. So I was not expecting us to rip lower at the end of the day. Like, I wasn't expecting us to close lower than the open up here. So that was obviously troublesome. But to continue noting things, we have seen that we're extremely bearish. I'll go back to the 15-minute because that's where I found my entry today. Extremely bearish. And then we have this gap, which is right here. This 15-minute gap forms over top of this New York PM low, which is actually really important. But if you were a support and resistance trader, this is where you would be looking, right here. And then you see, you draw that line over, it taps perfectly into this level. Now I'll explain why this level is important in just a second. But actually, this aligns with a quadrant level of the, like the gradient wick theory, which I will show in just a minute, which is what I trade, wick theory, pretty much. I don't do a lot with rejection blocks, though, but that's besides the point. But we can see this important piece of liquidity got taken, so after this, there's nothing but low resistance liquidity. So I wasn't expecting a low close, but if we close below the new week opening gap, I would, and we inversed it with displacement, which on a higher time frame, this is extreme displacement. Like, I think if you went to the 1 hour, this would just even show it. Yeah, that's strong. There's not a single retracement in that leg. So We could potentially tap into this level tomorrow and go lower, but I keep worrying about tomorrow and not my recap on today. But as you can see, we continue driving lower. We sell. We tap back into it here during the open, but oh shit. I think that's the low I'm looking for. Yeah. Okay. Yep, that was a little bit of a mistake, but that's okay. So now, what do I notice as we head in the market open? So I got on the markets about right here is when I'm getting on, like about 9 o'clock. So this is what I'm seeing. I don't have premium, so I can't use the replay to show you. But the only thing that is notable above where we're trading, and the only thing that I'm noticing is here, we took and we sort of cleaned out this range of London. So London formed a low right after it. So it's pretty much, in my opinion, a session low. I would consider this a session low. And we have to look as to see why we stopped here. And to be honest, I'm just going to tell you. It is the 25% of this new week opening gap. If you drew a fib right here, now it'll be the consequent encroachment right here, the red line. But if you draw your fib out, you'll see that it taps into the consequent encroachment perfectly. But if you outline the entire range of this, it would be this level right here, which I can actually just go ahead and do. But you can see this 75% level, I normally draw from bottom to top, so it's actually 25% normally, but it taps into this level here, which is an extremely sensitive price point, as to show we do not want to give discounted price. So in terms of the new week opening gap, when you grade it, if you study premium versus discount, the upper half is premium, the lower half is discount. If we are higher, all right, we do not want to offer discount prices to anybody, because discount is buying it cheaper than what you are going to sell it for in the near future, at least when it comes to the market. And then equilibrium is the 50%. So essentially, to explain what I thought was that London making its low right here in the new week opening gap shows that we are in need of a retracement. We have been very, very, very bearish, dropping, which I assume just by looking at is 500 points. I'll measure it out to, but if we go to Asia, draw out to London. Hold on. If we measure this out, the upper part of Asia, so just a little bit over this, drop to where we stopped. It was actually only 400 points, which is a bad judgment on my part. But the only thing that's available prior to the open at 9:30 is these London highs. Now, when we study liquidity concepts, we know that if there is relative equal highs with relative equal highs next to them, the probability that these relative equal highs are the draw is significantly higher. Like, you're looking at like an 80% chance on this if one of the sets of equal highs are during a kill zone slash pivot slash, session. Session's the best word. But this session high being right here is almost entirely vindicative of the fact that we're taking it. Vindicative is the wrong word, but it's almost guarantees that this high is going to get hit today. And to be honest with you, it's the only draw. It is the only draw that is pretty much guaranteed. Now, it's not guaranteed, but it's pretty much guaranteed. And then this low is the second draw, but you would have to be expecting lower prices. And since we've been so bullish, if you look at all this price action, bullish over here. Now we're in a retracement right now, and I don't know if this is going to stick, but if it goes below the 79% on the big range that I was outlining in the beginning, we will see a fall off, like a pretty steep one too, because we're going all the way to that fall low. So it's pretty dire straits right now for the market as to staying up like this, and it's pretty propped up, which is why you're looking for longs, especially when we dumped so much overnight. Like, just a small retracement is critical for us. So I'm going to take off this low that I outlined earlier that we took to signify sell-off, soup, turtle soup. So we swept liquidity, took out all of the stop orders. Now we need a retracement. So I'm looking for longs into the open. And then also we have this high probability draw on liquidity. We are respecting, the PD arrays, the bearish PD arrays right here, right into the open, and then we're touching the top of the new week opening gap. So removing these gradient levels because I understand what price is looking at now. We have a pretty naked chart apart from these shaded areas. But all I see right now is this and then Asia. But Asia, the range is at the top of this gap, completely closed in by the bodies of the candlesticks. So I'm not expecting us to go all the way up there. Instead, the bare minimum is top of London. And then, so now we're heading into open. I'm keeping on the 5 minute just so I don't get faked out by any of the first 5 minutes of market open. You sometimes will see very big candlesticks on the 1 minute open, and then you're tempted to just take a quick scalp up to this high, and then it slams it down, knocks you out of the trade, and then moves up. But we're looking for longs here. So we need to operate with that narrative in sight. So what is the most likely group of people to get taken out of the market to not allow them to profit on longs? Now, I don't recommend ever marrying a bias, but the most likely group to get taken out of the marketplace right now is all of the buyers right here. And then shortly after, all of the sellers right here. Okay, so if you're selling your stop losses somewhere around here, if you're like an institution, I would imagine at least. And then your stop, if you're a buyer, is right here. And you're nearing close to your stop, but you see this right here as you're heading into the open, so you're probably not too worried. But you're trapped, essentially. You're banking that the market is going up. So now it's just a matter of time. What are you expecting? And right before I go, I'm just looking to see any gaps. All right, if we can find any 4-hour gaps, that's where we go. And then we'll outline 1 hour liquidity right after. But so going to the 4-hour gaps, we're looking to see what price. So this was what this morning. Okay, looking for any 4-hour fair value gaps. So right here, this is our target. And why this fair value gap? Okay. To explain why this fair value gap. So this is a 4-hour fair value gap, and I'm doing this right before the open. But as to explain why this fair value gap and not this one up here is because this has this order block right here, which is it's not really an order block if you're being honest. This is your order block, but all of this is a change in state of delivery because this is the retracement right before this massive sell-off. So right here is where you're going to get your first set of resistance. Now it's easily ran over, but this is your first set, all right? And that is right above this fair value gap. Now, we've done a lot of selling off. And when the markets are ripping lower, they're not going to spend much time in your PD arrays, okay? Your fair value gaps don't have to get filled. As a matter of fact, you don't want them to be filled. So what you look for is the consequent encroachment. Now, if you look at the consequent encroachment of this fair value gap, you see these bodies perfectly respecting. Now, this candlestick closes at 10 a.m., alright? So you can only see this after 10 a.m. But here it shows amazing precision. But you don't know this yet. All I'm seeing is this candlestick right here. All I'm seeing is this candlestick right here, alright, on the 4-hour. But I know that there's this gap here. So this is my target, the consequent encroachment. However, I don't actually take this target because the London highs are right there, and they're pretty probable. So now we're going to look for 1-hour highs, and this is the last little bit of business prior to 1-hour highs and lows, prior to actually watching, the candles paint live. So we have all this information on our chart right now. We have the refinement of the gap right here, this 1-hour gap, which consequent encroachment aligns completely, not completely, but very close. So this just confirms the probability of the consequent encroachment. So this is our target. This is as high as your target could comfortably go for you to say that you're not a lunatic. But even then, the London highs are where I would end up. So outlining bullish targets on the 1-hour, we have this high right here, which seems like it's important to me. Hold on, wait, what was I doing? Short-term buy side. And then I would just outline another high that seems important, which seems like this one right here. This is all low resistance, so 9 times out of 10, these aren't going to get hit anyways. It's the inefficiencies, which you have a fair value gap right here, fair value gap right here. Um, I don't see one right here, but fair value gap right here. So you have a lot of inefficiencies that need to be filled that were left open. So for price to deliver efficiently, you would need to see these hit. So now that we've outlined that, we have our hourly low right here. So this is the low that remains intact, and then we're just going to scrub over a little bit in the chart. You see pretty much no important lows here. This is the bottom end of a data wick. So, you can look for that to get hit tomorrow. I'll actually go ahead and outline that on my chart for tomorrow. But you're not targeting that on this day's range. That'd be lunacy in my opinion. But so now let's go to the 5 minute, and we'll watch the first, and I can walk you through now what I'm looking for. Well, actually, the last little bit of business, I just would normally look at my notes right here and make sure that I have all my business done. And the last little bit of business is actually the most important, which is funny that I forget. But it's to outline the gradient ranges. So the gradient ranges are very, 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 very important. And on a day like today, this is the candlestick that we're looking for. So it's just basically taking a premium wick up here or a discount wick, which is like this one right here. And then you simply just scrub it over in time, and then you look and see what levels it aligns. Now, at first this seems a little silly, but I promise you, if you do this on your charts, it takes your consistency to a whole new level. Alright, so if you can look and see right here, this gap that I was talking about earlier, alright, I think it wasn't this gap. Maybe it was. Yeah, it was this gap right here. And I was telling you that it aligned with the gradient level. That also aligns perfectly with this level. It's funny, but because this is the bottom of the wick, but because that is the bottom of the wick, it creates these confluences up here. Like you see this order block align perfectly with this consequent encroachment. You see this stage of Asia accumulation right before the big fall occur on this this 75% level, I believe. Yeah. And you see this fair value gap, this upper quadrant, consumed by these. Alright, so this is an important read because it essentially means that this all becomes high resistance, which confirms your bearish idea that we need to ride lower into the new week opening gap if we fail longs. And because we've been so bearish, you're simply looking for a retracement in the open. And you also look, London was a continuation move with Asia, so there was no manipulation. Nobody was taken out of the marketplace. We ran no stops. So now it's time for stops to get ran. So London highs are the most probable. This has been a little all over the place, but I'm dropping into the 1 minute time frame now, and I'll show you what's going through my head as I'm watching price deliver. So actually the last thing that I want to look at is were there any wicks of importance? Here, yeah, so this is an issue I ran in with this morning. This is the only wick that you could use for all this price action right here. So what you're using are the inefficiencies, okay? So this new week opening gap, you could grade it, but there's really no need. All that you're looking for is on your own now, in my opinion. Which is kind of complex, but I'm almost done with this video. So now, on the 1 minute, you look and see this wick takes this high right here, and then we go lower. So to confirm that we're in a bullish idea, we start respecting every single bullish PD array, and we start disrespecting bearish PD arrays. So right here is a bullish PD array and a fair value gap. Right, that is a bullish PD array. So for us to ever long, we would have to start respecting this, okay? So right here, you see, we're inverse with significant displacement. We tap into it, we go higher, right at the open. So some people would, I'm sure, see this candlestick close above here, and tap into this, and then long, just in anticipation, because they think we're just going to immediately reach for these London highs right here. But it's not true, okay? Now this 4-hour fair value gap being right above the London highs is amazing to confirm this is a draw on liquidity. So whenever you're looking at this, you have all these relative equal highs stacked up here, this, and then this is 4-hour gap, meaning it's almost no chance that we don't reject up here, at least somewhere up here. And to be honest, these bodies closing above this is still concerning. Like, you would not have expected it to go this high. Anybody wouldn't have. But so now we have this bullish fair value gap that price completely overruns and then goes lower, taking out these relative equal lows. Now, these aren't super high probability because this low is lower than this one. If this low was higher than this one, it would confirm bullish, and then we would get a really great market structure shift. But this is still a market structure shift, but not a great one. And this is now a breaker. So this is a bearish breaker. So to outline this for you, this zone right here, drawn over in time. So to confirm, so it's a low, a high, and then a lower low. So this PD array, take the last candlestick in this move right here, draw it over. This is our breaker zone. So for the breaker, how it normally functions is you drive lower and then you tap into it and then you go lower again. But if you look, right, not only do we trade through it with this candlestick's wick, so the wicks do the damage, the bodies tell the narrative. We also extremely inverse it, okay? So this inversion, followed by this retracement with the bodies respecting this breaker zone, is your first entry. Now, the only thing that would keep you hesitant right here are these lows, right here. So why are we not taking these lows? And that is because, give me a second to think right here. Where's the new week opening gap? It's up here? This is not my proudest moment, to be honest with you. Yeah. Regardless, though, I think something's off with this. Where is this new week opening gap? It's right here. So I'm not entirely sure. I'm not entirely sure what's going on with that, but we should be seeing it on this lower time frame chart. I feel like I'm not seeing it. I don't understand, but that's okay. But as to why we did not take this low is, to show you a little bit better, is these lows are sufficient because the price needs to go higher. It's in dire need of a rebalance because we went and fell over 400 points last night. In a perfect world, you would actually see this taken. Alright? We would see this line right here taken, and price would trade below it, get a strong close below it, and then we would drive higher. But the market did not go lower, and if you go to the 1 hour, you might actually even get a gap right there, which would explain a lot. I'm not going to lie to you. Yeah, there is no gap, but that'll be okay. So dropping to the 15-minute, the last thing that I want to outline with this trade idea is what is not the gap that formed there, but actually this rejection block. So this is what I wanted to show. I made a bad mistake saying that there would be a gap there, but there is, alright, in this gap right here. But the problem is that the bodies do respect it, but the wicks go completely below it. Now that's because of the volatility that we experience, but this 15-minute gap falls at the upper end of this new week opening gap, excuse me. But essentially, this gap will deter price, but you want to get a precision entry. So your next best thing is this wick right here. So this is wick theory, and this is the second part of wick theory that I don't use a lot, but I do use it, is a rejection block. So a rejection block is essentially, we see the first bit, this bearish PD array, this bearish fair value gap, gets inversed with another fair value gap. So this also, alright, now becomes a bullish fair value gap stacked on top of a bearish fair value gap, so it's a balanced price range. So price does not want to close below this, but the wicks go down here. So when you're watching this get traded below, you think it's inversed. But so now what our confluences are, this consequent encroachment doesn't get traded below of this rejection block at the upper quadrant of this new week opening gap. So if we gradient that as well, Like I said, this will be the consequent encroachment, but this was just to illustrate the idea. We now have the idea that we're not going below the consequent encroachment of this rejection block. We're not going below the consequent encroachment of the upper half of the Newegg opening gap. I mean, we're not going below this. And this low right here is expected to hold because it did not trade below this lower quadrant. So that's a very difficult idea to manage, but it's not always easy. So now we have 3 potential trades that we could take whenever we see price trade down here. So just to illustrate this a little bit better, we're on the 1 minute time frame, right? And this is what we're seeing. We see, this is what we're seeing. So price trades lower, creates a bearish breaker. We expect price to tap back into it. We go above it. So now any entry that we had, we accept that it's gone. We see it tap back into this balanced price range, this BPR, after just trading it in and out of it, you know, not really respecting it at all. Then at the time that we're supposed to look for, the 920 to 940 macro. All of a sudden, we see the 940 be the last leg, and then we start spooling upwards. But that's besides the point. Anyways, we see that whenever we're supposed to be respecting this BPR, we just completely inverse it to the sell side. So right now, at this candlestick's formation, right now we are bearish. And this leaves behind, I'm not going to put it on the chart because it's a lot. I'm also going to take out this bullish fair value gap. But we have a lot of stuff right here. Now it's important that you have this on your chart so you can digest it. But the last thing is these two fair value gaps formed, you know, subsequently. So if you go to the 2 minute, now I'll have to scrub all the way back over if I go to the 2 minute. But this is essentially the 2 minute. And this is the first percent of fair value gap. All of this right here on the 2 minute. But on the 1 minute, this is the first percent of fair value gap. So if you want more precision, you wait for this candlestick's close. And then you long. But for me, alright, because I study rejection block theory, this rejection block failing to close below this consequent encroachment before we closed above this gap, alright, failing to close below this consequent encroachment before we closed above this gap, this closure right here is enough for me to go long. So I go long right here, okay, inversion of this gap, that's a disrespect of a bearish PD array. It's, now we can't guarantee that we're going to stop here. So what are we looking for? The inversion of this bearish breaker. The body's respected perfectly. We trade down below. Order block right here, the last closed candle, opposite closed candle prior to the move upwards. This is a market structure shift because we disrespect. It's not necessarily market structure, but it is the disrespect of this PD array signifies bullish momentum. You could add to your position here, keeping an ultra tight stop loss right here at this low, which I did not do exactly, so I'm not going to like criticize you, because I get a 10-minute later fill, so I got filled on like this candlestick right here, I believe. But then we see trades down below, we drive back up, alright, take this high. Now if you traded multiple contracts, you would take your first set of profits at this high, alright, but your entry is right here after the inversion of this gap, so this is an inversion fair value gap. You can compound, you can add here, you can inverse this gap, you can add right somewhere in here, the formation of this candlestick, retracement, respect of this fair value gap, you know, let's just outline this fair value gap for you. Alright, let me put the consequent encroachment to show the precision of this. But that's not it, this will be it. Consequent encroachment of this gap respected almost perfectly at the bodies, so this meaning the premium is still being respected, but the discount is not. We're not spending a lot of time in the discount. Showing complete bullish momentum. Drive higher, target these London highs, and then you can pretty much ride this up if you wanted to this level right here. The consequent encroachment of this level. Because as soon as you see this close above this level, you could just ride it up. But I took all my profits right here. At the end of this trade, to just show you, this trade ended up being, it's not my best trade by any means, but this trade ended up being, I think I got it filled. I would have gotten filled like right here. Alright, stop was just at the consequent encroachment of this price level, which I have magnet mode turned on, so it's kind of a bitch. Consequent encroachment. And then targeted this. So the final RR on this is a 1.5. However, as soon as this high gets taken by displacement, and then this gets taken, you can literally move your stop loss to right here, like, and then all of a sudden you get a 14. So, you know, you can go break even incredibly quick on this trade. You take 1.1s to 1.5s on high probability. We have so many PD array confluences right here. The inversion of this balanced price range, which on the higher time frames you see respected, which I won't go because I'll just have to scrub back over. But this is literally amazing price action. We're going against the overall narrative though, which is bearish, so that's why I took profits here and not here, or right here. And then right at the end of New AM, like the New York AM session, we see a sharp sell-off. Respective of bearish PD array, we now know that it's completely over. If you were still in this trade right here, the second we leave that gap, and the second we retrace and respect this PD array, and then you see this displacement candle, you should have closed instantly, like, because we knew it was going lower. Now lunch whipsaws around a little bit. Your PM just kind of gradually sells off. I didn't look at any setups there. I'm not going to. I'm happy with what I was able to accomplish today. So, the audio is probably horrible on this. I'm still learning Camtasia, but I wanted to put this little video together to explain kind of my trading and how I do things. But I will not watch all of this through. I will just put the AI noise like cancellation on it. I'll just listen to some of it and click through a couple different parts and see how the audio was. But I plan to upload this to the Discord tonight, and then pretty much have super short videos after this. But really cool, really great day. I'll also probably put this in my own little journal just to keep it, study it. But if anybody does watch this in the future, other than myself, thank you for giving me a little bit of your time, because you're probably going to get rich off of this. These ideas are incredibly high probability, incredibly accurate. I mean, you see these things respecting the consequent encroachments, the upper quadrants, like almost to the tick. It's literally disgusting. You know, we see this upper quadrant, this like beginning of the wick completely respected. So it's a little bit more support and resistancy right here. But it's literally stacked on top of the idea that premium and discount, which all takes time to learn. And I will answer any questions. In a way, this video is for my brother, my brothers, and potentially even my sister if she ever wants to do this stuff, but we'll see. That's not too important. It's probably going to end up just being for me anyways, so just got to keep my head up. But if anybody is watching this, good luck and good trading.